So these gentlemen are going to teach you how to make trillions from security tokens. There you go. Okay, first I'll introduce them. So we'll start with Rafael. You're the co-founder of TrustToken, which is a San Francisco-based token issuance platform, most famous for TrueUSD. I own TrueUSD. I hope it goes to the moon. Can you tell the guys a little bit more about what you do apart from TrueUSD?
Yeah, so it's probably not going to go to the moon. Hopefully it won't go to the moon. But TrueUSD is one of the largest regulated stablecoins in the world today. It's got about $200 million market cap. And we're going to be rolling out a series of new products this year that we're very excited about other tokenized currencies. And we see a lot of what we're doing as laying important groundwork for security tokens that we think will be a large market down the road.
And which currencies are next? Are you able to share the kind of list in order, do you think?
We can't share too many specifics, but I can tell you that GBP,
Sterling,
Canadian dollar, and Australian dollar are all high on the list of ones that are coming up soon. And we're also working on Hong Kong dollar as well. Oh,
fantastic. That's great for people here in Hong Kong. Okay, very good. And we'll ask you later on which one you think is going to pump the hardest. All right. Alex, founder and CEO of VNX Exchange, a Luxembourg-based security token exchange, and you do something with venture capital portfolios. I'm not rich enough to invest in venture capital or whatever. I don't really understand it. Can you tell these guys what exactly you do there?
Actually, the platform is a marketplace for securitized portfolios of VC funds, and it actually solves the problem that you addressed. Actually, it lowers the barrier to entry. So typically, the funds would be really looking for LPs 1 million plus, the best funds 10 million plus. On our platform, you can be a qualified investor and start to invest already.
So people with less money can take parts of bundles of assets, take the cash flow from them. So they'd invest, smaller ticket sizes, like 20K,
Indeed.
20 bucks.
Eventually, of course, we would like the marketplace to be open to retail investors, but for now it's qualified investors only. But the benefits are twofold. Number one, you can have in one place a number of portfolios that you can choose and invest. And the second one is you can actually liquidate your position at any time. So it's really active.
So I could be a VC for like 2 days. I could be an LP, a limited partner, an investor into a basket of whatever the VCs are buying. And for like 2 days, if I want in and out, or I'll probably hold it for a bit longer because there's some income that comes from the tokens.
That depends. Let's say you invested in a portfolio of, let's say, a fund, very famous one, and the next day there is news that Google is buying one of the companies, the price moved 50%.
All right.
You're probably happy to sell the next day. But at the same time, you don't need to. You can actually stay there for longer and get the cash flow from the portfolio.
And these cash flow, are you working with him is the cash flow coming in dirty fiat dollars through the banks, or is it true USD, or is it Tether, or Pax, or Circle?
For now, it's unfortunately dirty euros.
Dirty euros. Euros should be next on your list.
It's one that we're looking at.
Okay.
Good.
All right, euros. In Luxembourg, that kind of makes sense. Vijay, I don't get it. You're doing the same thing, but in the US, is it the same as this, but with dirty dollars, or how do you differentiate? You're also a private security token exchange platform?
Sure, yeah. So we are a US marketplace, so an ATS and a broker-dealer for the trading, issuance, and the custody.
You're going to have to break down ATS. I don't know what that means, man.
Sure, an ATS is, it's essentially a marketplace for private securities. So you have this concept of a public equity exchange. For the private market, or essentially the pre-IPO market, or any of these kind of other assets like REITs and fixed income and so on, you can trade those on an ATS. So it's basically a private marketplace.
Okay.
So we offer that for the US market. So it supports the trading, the issuance, and the custody of security tokens and digital securities.
So, for example, a company like Uber, which isn't publicly listed, you can't buy it on a normal stock exchange or stock market. Can I buy Uber shares on your platform?
Yeah, you can. In fact, SharesPost for the past 6 years has been active in the secondary market for private unicorns in the Valley. So that's actually how we got our start, and we see a lot of commonalities between that world and that market and what we're seeing in the STO and digital security space.
And can I buy like $200 of Uber?
So you have to be an accredited investor, and
What does that mean?
an accredited investor in the US is someone who has above $1 million in assets or $200,000 in annual income. So the bar is pretty high. We see that as a good starting point for the market, because when you're talking about these things that are a little more opaque or less regulated, it's always good to take the baby steps. I know it's hard for the crypto space to move incrementally versus 0 to 60, but I think the security token side of things merits that kind of approach.
So I got to be rich, but then can I invest $200 in Uber?
So there are minimum transaction sizes, but yes, you can. One quick note is that long-term, we see a lot of potential for retail-facing broker-dealers to basically provide access to this market in the same way that a Schwab might. But first, the market has to become more liquid, and there has to be more infrastructure out there for that to happen.
So make it more efficient and drive down the pyramid towards where I am, and then I can buy $200 of maybe a digital collateral receipt, a token that represents a fraction of a share or some small amount of shares of Uber.
Right, and that's a long-term vision, absolutely.
Okay, so similar to what you guys are doing.
Yeah.
Indeed, indeed. And the future, of course, I think for both of us is that at some point you may actually tokenize the future proceeds from your book and then get the cash now. So private markets is basically what we're operating.
Okay, didn't David Bowie like tokenize, or it wasn't called tokenized then, he securitized his future. So he's a great singer, he's going to sing loads of, well, he's got loads of albums, there's money coming in, but he wanted to raise money now,
Absolutely.
and then his future cash flow would go to the investors.
Absolutely.
Wish you could do that on blockchains, on Corda, R3's Corda, it's the best blockchain. All right, last but not least, Stephen, founder of Alechemist. It's a New York-based security token offering, STO advisory, but you structured Ethereum in 2014. That was the first recognized ICO. There were a couple before that, but they were a bit rubbish. And T0, the first STO. T0 is also a platform, so it's all kind of intermingled. It's really hard for me to understand in my head. Can you talk a little bit about Alechemist?
So Alechemist, we help build blockchain companies, and sometimes those are protocols, sometimes, and then blockchain is what led to security token marketplaces, so both of those, and then also invest in them as well.
You do everything, advisory and structuring and investing. Maybe you could, like, maybe you could do your VC in a basket for him, and he could
And I'm going to
tokenize
use true USD.
Yeah, and the income streams are true USD or Pax coin. I used to work for Itbit, which has now become Paxos, so I'm kind of fond of Pax as well, but I also love true USD. Okay. All right, that was the introductions. Anyone got any questions? I got tons. All right, here we go. Security tokens. Vijay, I'm going to pick on you. Define them for me. How are they different from ICOs? How are they different from a SAFT, which is a PDF file that sits on people's hard drives that has two signatures that says like someone's going to send some tokens to someone? And how is it different from a regular issuance of equity?
Yeah, so I think ultimately it's more similar to the latter that you mentioned, so to the way traditional assets are issued, right? Because at the end of the day, the way I think about security tokens, and it's a personal view, and I'm sure there's a lot of different views, and also these views are evolving over time, but at the end of the day, it's a blockchain-based security, right? So what does that mean? I ultimately see two ends of that spectrum, right? You have your asset tokenization end of that spectrum, where you have people who are tokenizing equity in companies anywhere from Series A through Series D or E. You have REITs, fixed income, all sorts
Whoa,
of...
what's a REIT?
A REIT is a real estate...
Can everyone not use acronyms, or at least explain them to the audience?
Sure.
And for me, please.
Yeah, absolutely. A REIT is a real estate investment trust. So it's a model that's often used around the world to invest in properties and provide exposure to the stream of cash flow or the equity of the asset itself. So it's basically a structure where you can compliantly invest in real estate and be able to trade in the secondary market. So on that end of the spectrum, you have a lot of traditional asset tokenization. So that looks very much like traditional markets, right? Where you have your full cap table and people are looking at, so cap table is where the equity investors sit. And so on that side of the spectrum, it's much more of traditional market players, right? So a lot of the banks are looking at this. And then on the other end of the spectrum, and this is where there's a bit of the regulatory uncertainty depending on the jurisdiction, is the notion of how do you launch a utility token, right? And depending on the jurisdiction, certain regulators are saying that any token has to be launched as a security first, and then you evolve from there into a utility token. And exactly how that works is still a bit up in the air. It's
No, this guy's shaking his head. You're wrong.
Yeah.
No, I mean, look, that's some of the regulators are saying it's just somewhat preposterous, but I don't know. I mean, they're programmable, but like they also grow and turn into other things and then turn back. It's not necessarily because of the nature of what it does. What the regulators are saying is like they said it with like Ethereum and they said it with Bitcoin. At the beginning, maybe it wasn't decentralized, but now it's so decentralized, nobody controls it, there's no corporation behind it, you're not making money off of somebody else. Okay, it's some new thing that just came out because of this, and it doesn't really make that much sense, but...
So is it that the regulators are uncertain, or is it that you lot just haven't read up enough about the regulations and you're uncertain?
It's a fair question.
Can I pitch in?
No,
Please.
No. I mean, listen, I don't envy their position. All right, so I'm not. They're smart. Clay, in the U.S., the SEC chairman yesterday reiterated that their official position is that Bitcoin and Ethereum are not securities because they're so widely distributed, decentralized. There's nobody controlling it. But they're just throwing out one thing, and they're not giving the marketplace any like framework. So like there's some regulations in the U.S. in particular that are trying to like say, all right, if you do this, then you are not a security token. If you do that, and the problem is that the market, one of the things that the market is waiting for, because there's so many people that want to issue security tokens, they're afraid. And there's people who want to issue utility tokens, they're afraid because they don't have any clear guidance.
Clear guidance. Okay,
So
cool. So that's a US view. Alex, European Luxembourg view.
I think the regulators are uncertain as to what actually constitutes security, what is payment, and what is utility. The Swiss regulator took a view, but the European regulators have not actually adopted it. But the security tokens, in my view, is actually a representation of what would constitute a security in the real world in the regulated manner now. I think that's the safest way to describe them. And utility tokens is any membership benefits, any access benefits, etc., and payments is pretty clear. It's like Bitcoin, etc.,
Well, payments. Let the payment dude speak.
Indeed.
So how are you faring with regulators? Are they supportive? Are they skeptical? How are you finding your regulatory engagement?
Well, so the products that we're building right now, like TrueUSD and the other tokenized currencies that we're going to be launching over the next couple of months, those are definitely not securities because no one invests in them with the expectation of profit. They're not going to go to the moon, unfortunately.
What?
But we're regulated under a completely different environment where our company is an MSB, a money services business. And so it's a very different regulatory framework and it's a much more well-trodden path.
Okay. So it reminds me a little bit like you're from the US, so I'll say Venmo, kind of like you put money into a bank account over here and you get the tokens or the credit or whatever. In Singapore, we have Grab, which is a wallet. There's WeChat, there's Uber has a wallet. Is it similar to that?
Yeah, it's similar to that.
Okay, so same kind of licenses. In Europe, you call it e-money, right?
More or less.
Exactly. Okay, good. So what's gonna go first? On the road to trillions, okay, what's gonna change first and how and why? Is it private markets? Is it public markets? Is it money? How's this gonna play out?
I think it's going to be private markets.
Private markets.
Regulators per se are not concerned about the wealthy individuals. They're concerned
Regulators don't care about rich people.
If you generalize, they are more concerned about old granny in Sicilia being tricked to invest into the options by explaining that this is a very, very secure product. More specifically, they're concerned...
Like ICOs and stuff.
More specifically, they will be concerned that there will be a lot of people like this, because these are the voters and they are unqualified to make their decisions. Private markets are for the wealthy guys who, A, are supposed to have knowledge of what they do, and B, can take a hit from their decisions. Therefore, in my view, all the innovations that we're speaking about will first affect the private markets, and once the regulators are comfortable or have extended the regulatory framework that exists now to protect the small investors, it will move to the public markets.
And I see you guys nodding. Stephen?
Disagree.
No. I think what's the definition of a private and public market somewhat changes because of security tokens. And so, right now you think of a public market with these big, huge companies, and what happens if public market, your local coffee shop is actually listed there, right? And that's a security token market, and the barriers and the costs are driving so far down that our definition of a public company is changing. So those private markets or public markets, the whole concept of it is going to be altered by this.
And this is underpinned by a mega trend of companies staying private for longer and increasing valuations in the private markets, just because it's pretty tedious being a public company, all the quarterly reporting and the analysts and all that stuff. It's much easier being private. You can think further forwards, you can have a vision and maybe take a few hits for a few quarters. You're not always chasing the next dollar.
The private markets have been flush with cash right now too, so you're not getting that extra. You don't need the public markets. This is different though. This is going to affect more downstream. So that's not the Ubers of the world, but it's more the smaller companies that the regulatory requirements to go public are much higher for them as a percentage of their revenue, and so it's a much more onerous burden. And using a security token, it's much lower. They can go public, and then also they can get access to capital. It's a have and have not market. Like the huge companies, these unicorns, access to unlimited capital, but then smaller companies are getting, they're getting starved of capital. But this is a way to access masses of capital without going public. They just didn't have that alternative before.
But you've been talking a lot about equities. Everyone's been talking about equities. What about debt? What about the other traditional way of raising money through a loan, through a bond or commercial paper, or something like that, where companies don't want to give away a share of their company, they don't want to go to jail, so they're not doing ICOs, so they want to raise debt instead, where investors will pay them, and they'll pay them some coupons, maybe using true USD, and in 5 years' time, they got to repay the capital. Are you guys looking into the debt markets?
Yeah, I think so. Long term, we have the view that it's going to be a great use case. I think the challenge with debt is that there's much more involved in order to actually make a debt issuance happen, right? And it's just harder to structure. There's a lot more maintenance with the coupon payments and the principal, though in many ways, those actions are things that smart contracts can help to automate and scale. So we do think it has a lot of potential, but it will take a bit of time for that side of things to come to market. But I think in many ways, the whole idea of a digital security or security token, that trend is helping to enable the democratization of access to capital markets. So long term, I do think the idea that providing a way for the coffee shop to compliantly secure a loan as opposed to giving away equity, that is the end state vision, right? But it's going to take some steps to get there. And I think in terms of fixed income or debt, it's something that will happen. It'll just take a bit of time.
Anyone disagree? I'm going to disagree. So I think equity is actually quite hard work. There's all the documents about being a shareholder. There's the meetings, the shareholder voting. You talked about coupons being troublesome, but what about dividends? They're troublesome as well. Stock splits, buyouts, all that kind of stuff. Debt's really easy, and you can do debt without a coupon. You can issue some debt at, if you want to raise $500,000, you can actually raise $450, and then in a year's time pay back 500, zero coupon, so just issued at a discount, and then they pay the full amount later. You can still figure out the interest rate off that, but I think that's actually perhaps a simpler instrument. So challenge you guys to go and think about the easy, low-hanging fruit in terms of short-term debt, as well as doing what you're doing with equities. Cool, all right. Who's had traction? You've got traction because I have your coin in my wallet. Do you guys have traction? Yeah. This is your chance to show off to the audience how awesome you guys are.
Yeah, so we've got a view that may be somewhat controversial on this panel when it comes to security tokens, which is that we think that the traction today is pretty low, as I think many people have seen.
Pretty low?
It's pretty low, the traction in terms of security tokens in the market. And also there's been...
Don't say that in front of these guys, because they're meant to be hyping it up.
Right. Also, in general, there's been a lot more supply than demand. And if you go to conferences, people are always saying, like, oh, security tokens this, security tokens that, but where's the actual demand for security tokens?
So who's going to buy these things?
Who's going to buy them today? And so our perspective is that what's going on here is that we're not in the deployment phase when it comes to security tokens. We're in an infrastructure phase. And that there's a lot of groundwork that needs to be laid before security tokens will be actually useful. And today, they're not actually very useful. And that's why there isn't that much demand to be buying them. And so from our perspective, we think that there's a bunch of different types of infrastructure that needs to be built. One of them is stable coins. So that's a great thing that we're working on right now that contributes to the whole security token ecosystem. Stablecoins can be used for dividend payments. They can be used to trade security tokens. And stablecoins are also in themselves a good business, so that'll also help us to build a great business while we're building towards something that we think is also a huge potential in the future. But there's a lot of types of expertise that our company is building up in terms of being able to custody assets and issue tokens and support purchasing and redemption that are really setting the stage for being able to issue security tokens down the road. But when we think about security tokens and the timelines, we're not thinking 1 to 2 years. We're thinking more like 5 to 10 years. And the next 1 to 2 years, we see a lot of that as laying the groundwork and building the infrastructure.
All right, he's trash talking your business, guys.
So I know I'm not supposed to agree with that, but I actually agree with that 100%. I think the challenge is that we're moving at crypto speed in a space that's highly regulated, and it's just going to take incremental steps, I think, as opposed to a full revolution happening overnight. Yeah, you go to all these conferences and people who used to have ICO in their title now have STO in their title. Like it's kind of a control F thing. And so I feel like there's a lot to kind of cut through in terms of the dialogue, and setting the right expectations is something that we think is super, super important, just because people have the crypto expectations up here, and right now we're here. And I personally feel that there's a clear path to getting to the end state, and kind of, as we spoke about at the start of the panel, but it's going to take time. And definitely this year is in laying that foundation, absolutely. I think next year is when you start scaling more of the secondary market, but it's not going to be an overnight success. It's going to require a lot of kind of incremental listings and making sure that people pick thoughtful issuers to put on their platform. Because if it ends up burning people, there won't be a lot of shots on goal, right? So it's important to be super thoughtful. And
that's easy for you to say because you're a real business with real kind of traction before tokens came along.
Sure.
Yeah. Okay. Yeah. So Steve, you had some. You kind of rolled
your
eyes a little bit.
I was rolling my eyes. No, it's not that that's wrong. That's happening right now. But I actually don't think that that's the big problem for adoption. That's a matter of time and money. They know what to do. Like his private marketplace is already up right now. It's SharesPost, and it could be trading. It's the bigger problem is standards and regulation. Right, so there's no standard right now. So the US is doing one thing, Europe's doing another thing, and then different countries in Asia are doing all their own thing. And so it's like, could you imagine the internet before TCP/IP and saying, this is gonna go worldwide? And it's just not gonna happen, right? And TCP/IP comes in, everybody accepts it as a standard, and now all of a sudden we can all
That's what
change.
he's saying about infrastructure, right? The standards will drop out of the
No, but it's not, what I'm trying to say is that everybody is building their own TCP/IP. Right, so it's not the actual building of it, it's just agreeing on one of them.
They should use Corda, which is R3's platform. It's the company I work for. It's just the best. It's designed by with and for banks for regulated financial securities. It's just, we've had total return swaps. Yeah, I'm doing a bit of shilling.
If only I had a great blockchain
It's just awesome for regulated instruments. If you want to do crypto kitties, go nuts on Ethereum. But if you want to do serious stuff, you should consider Corda. Back to back from the commercial break. Back to the panelists, guys. All right, what's the sweet spot in terms of deal size, ticket size? You're doing cash, so maybe it's less of a question for you. But in terms of, are we talking big deals, little deals? Where do you see the sweet spot for these kinds of things? And I'm going to ask all three of you separately, actually.
Right now, I think you're seeing smaller deals. People where there's control, like 1 or 2 or 3 people can say, we're going to take this because they're at the
give me some numbers. What does smaller
50
mean?
to 150 US million is about.
That's not a small number.
Yeah,
50
those are small numbers.
to 150 million.
But I mean,
US.
relative to what you were seeing before, there's still the cost associated with this that hasn't dropped where it's going to drop.
And you said taken by 2 or 3 people. So these guys are doing clips of like 30
they're doing like a build. They're doing like an individual building that they have out of their whole portfolio. They said, let's try this out with this one building. But we have 10 billion, we'll take a $200 million building, a $100 million building, and we'll do that.
So real estate.
Real estate is one that they're trying to do a lot with. There's some equities that they're trying to, equity-like features. It's hard to actually say whether or not it is an equity or not.
Right.
You know, so it's, they're programmable. So those are kind of the two areas. The debt market, I actually agree with you. I think that's, other than currencies, that's the mother of all markets.
The debt market's the
will
mother of all. Who's on the Twitter feed? Guys at the back. The debt market is the mother of all markets.
The security token market will be the mother of all markets.
On Corda is what he said. Okay, Vijay.
Yeah, so I think I would probably say smaller is better at this point in time, just because.
And what's your definition of small?
I would go even lower than Steven. I'd probably say somewhere between 10 to 30 million raises. And the reason is exactly the point that you guys were speaking about earlier, which is that there's a ton of potential STO or digital security issuers, right? But the challenge is really where's the buy side? And if you go to all the conferences, everybody's talking about a potential STO they might issue or STO issuers who they're working with. But we still have yet to see, I think, deals close successfully in the market and happen at scale. And again, I think we'll get there, but it's a little bit of this bootstrapping that flywheel a bit and starting small. So I'd say 10 to 30 million is kind of the sweet spot, in my opinion, at this moment.
In equity, in shares?
No, I would say even in real estate or fixed income. I think obviously it's harder to get properties that small in real estate.
That was my idea. Like, fixed income was my idea. You guys didn't say that at all in the first half of this conference. I'm glad I've influenced the influencers.
Fair enough.
Okay, so we've got real estate, slightly larger ticket sizes. Your slightly smaller ticket sizes in real estate and perhaps debt.
Yep.
But also working hard at equity as well. SharesPost. It's a great platform. I wish I could access that.
And of course, from when you go from the US to Europe, everything seems smaller. Our idea of the ticket size is even smaller than that. I think 5.
It's not a competition.
No. It's reality. US is much bigger as a market, as an economy. In my view, 5 to 10 million and probably 20 to 30 people of qualified investors per deal is what we're looking for at the moment. Coming back on the previous topic, it's important that people are not burnt from both sides, actually. That the issuers of the securitized portfolio in our particular case feel that they really have a good deal, and at the same time the investors. So this is a fine balance. When you start building it, you really need to make sure that both sides of the marketplace are happy.
Right, the balance. Otherwise, it's all supply and no demand. You wanted to say something. You're gagging to go. Go.
So I guess we've had some descending sizes, and again make a.
You're doing $1 single dollar.
So this is something that I'm still unsure of, and that I need to do a lot more thinking about, and we need to do a lot of thinking about as a team. But one of the things that we think is interesting is looking at extremely, extremely large size. So for example, tokenized S&P 500, right? There's $23 billion plus in the S&P 500. That's the kind of market cap that we're talking about. And if you think about a product, like if you could launch true S&P 500 as an ERC20 token, what's the global demand for a product of that type? That could be in the tens of billions. It could be a huge, huge demand. And similar for debt instruments like with tokenized treasuries. And one of the advantages of products of this type is that they're very well understood by people. I don't have to explain to you, what S&P 500 is or what a treasury bond is. These are super well understood, super conservative, super solid investments for people. And also from a business perspective, when we're thinking about launching products, if you're launching small tokens, small security tokens, you're sort of like an investment bank where you're only as good as your next deal. And you need to hunt down that next small startup or that next real estate investment to bring it to your investors. And the moment you don't have another good deal, you're done. And that's the business that JP Morgan and many other investment banks are in. And it's not a bad business, but it's not like a scalable technology business. And so we actually are very bullish about security tokens, but in the long, long term, not necessarily in the next year. And we think that it may look very different from what it looks like today. And one possibility is that it could look like very, very large, very well-trusted tokens that are products that have billions of dollars of market cap and are traded globally. So that would look more like a true USD or these types of tokens as opposed to like a tokenized property.
Right. And I hope these guys prove you wrong, because 5 or 10 years is a long time. We'll be doing a lot of panels before we get to markets. So I hope these guys are working really hard to compress that timeline. But speaking of timelines, our time is up. If there's, and I agreed with everything you said apart from the ERC20 bit. We got to talk about that.
I meant on Corda. Sorry.
If there's one kind of call to action for the audience here, how they're going to make their trillions, or any kind of call to action, what's your single bullet point to tell the crowd?
Well, I don't think that you're going to make. I don't think you're going to make trillions over.
Okay, you're not going to make trillions buying true USD unless you buy trillions of true USD, and then you'll have trillions of true USD. Next. Sorry, time's up, dude. Alex, what's your bullet point?
Invest. If you
Invest.
want to make trillions, invest and work hard.
So buy the security tokens. Vijay.
Always ask yourself the question, would you invest in this?
Oh, interesting. Okay, so think before you invest. All right, and Steve?
This area is the largest wealth generator, I believe, that we'll ever see in our lifetime. So you have to have some vested interest here over time.
Fantastic. Okay, guys, thank you very much. That's your panel.